Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning for your financial and retirement futures. He is president and founder of McIntire Retirement Services. Chris McIntire with us. Chris, welcome back in.
Hey, good morning, everybody. It's good to be with you, Peter.
Always a pleasure, Chris. We appreciate the time that you spend with us and, of course, the listeners and viewers of the program, helping them get the information they need to make more well-thought-through and informed decisions with their money about their financial futures. Chris, planning is something that, unfortunately, this time of year gets kind of put on the back burner. People procrastinate and say, oh, I'll just take care of that next year. In reality, this is a great time of year to get some planning done, and we probably should all be a little bit more proactive because, in fact, there are maybe even some deadlines that we need to be paying attention to here at the year end.
Yeah, there certainly is, Peter. You can only contribute to your 401k at work during the calendar year. We can contribute to IRAs up until the tax filing deadline. So some of those items we'll talk about next year. But that's a big one for those of you that want to get some extra money put into the 401k. You need to do it between now and December 31st. So reach out to HR and figure out how to make sure that you're maximizing your 401k or Roth 401k contributions for the year.
Charitable giving, another one. Roth conversions, another one. So there are a few things, right, Chris, that you're helping people pay attention to and make sure they're getting executed. And if we've got those things on our mind or need some help and assistance with them, a good resource, ladies and gentlemen, is Chris McIntire there at McIntire Retirement Services. Always welcoming your calls, questions, even if it's to find out if one of these strategies might help you before the end of the year. Give them a call, 800-868-1194, 800-868-1194, or you can go online, McIntyreRetirementServices.com, McIntyreRetirementServices.com. But Chris, we are in the home stretch. I mean, almost over with this crazy year that's been 2020. Marked a lot of historic events, of course, but wanted to talk a little bit about how to make the holiday times, which can be stressful, a little less stressful with some common sense tips and approaches to maintaining our budget during the holidays.
Yeah, and we've had people adversely affected by economic issues during the pandemic here. Some folks have probably fared better than average, depending on the industry that you work in. Obviously, restaurant workers and hospitality folks have had a struggle of it here this year. And, we had some good news there with Pfizer toward the beginning of November there. And, we'll kind of see how all of that ends up shaking out and whatnot. And with vaccines and some treatments out there, for people that actually have COVID. And so, that should, I don't know about you, but that has certainly given us a bright spot, or let's call it light at the end of the tunnel potentially for working our way back to normal into 2021. But as we're here into the holiday seasons, here's what we're doing in our family from the Christmas side of things, which is typically where, hey, we're going to go out and buy some things, some consumer discretionary pieces that we don't always do in, January or even July, but it's that Christmas season. A lot of folks are probably going to be doing remote Christmases, as we did remote Thanksgivings, that type of thing, especially in our household. Not exposing older parents and whatnot to potential virus issues. And, and so we did what do they call it? Where you draw out of the hat. I forget the name.
The Secret Santa.
Secret Santa. My goodness. Yeah. And we did that with, on my side of the family. And this year we did it on Robin's side of the family as well. And, we set a budget. So your gift is limited to $50 range. So, put your names in the hat. So we stick to a budget here this year. And, I think a lot of the people that are listening today, we're going to be shipping those products instead of sitting around the same table. Obviously cases have been just going through the roof here around the globe, not just here in the United States, but, it's time to, monitor and be very cautious and apprehensive. No question about it.
I actually liked the remote Thanksgiving, Chris. It allowed us to get back together with some family that we hadn't seen in a while, and the grandparents on my mom's side were sort of the glue that held the family together, and they both passed away 4 and 5 years ago. And since that time, we really haven't been doing the big Thanksgiving get-togethers like we used to do. And we actually touched base with a few of those relatives on that side just to say hello, just a phone call, dropped a text to a couple of them, happy Thanksgiving, and it was nice to sort of reconnect with a few of them. But I think you're right. The UPS, FedEx, they're going to be real busy coming up through the holiday season. Obviously, the Postal Service will be, but this is a time of year, Chris, where I love that Secret Santa concept. We do that in my family as well. It helps us to stay in budget, but it's really easy to go over budget if we don't have one set and we have not discussed how much we are willing to spend on gifts for all of the people that we care about.
You're right, Peter. And, you and I are used to Amazon and all these websites where we buy online and ordering groceries. And, certain segment of our population that is not so used to point and click. So they may end up going crazy on Amazon, clicking this, clicking that. And
then it just shows up at the door. It's beautiful, but it can be a little bit of a curse.
Yeah, I think my wife's actually got a crush on Jeff Bezos as often as Amazon shows up here anyway, but I'll digress. We'll save that conversation for a different time. But, we pay attention to, the Amazon Prime days and, looking at Costco, Kroger, all the different retailers in our area and trying to buy at the right time. And, you would certainly think that this year, pre-Christmas and then probably really after Christmas, there may be some huge sales that come into play there. So, maybe you delay your gift exchange until January or something to take advantage of the post-Christmas sales.
Well, Chris, a lot of times we go over budget in December, and it's painful in January and February trying to dig ourselves out of that hole. And that's kind of an analogy for the lifespan of our retirement, too. If we go crazy in the first few years doing everything we always intended retirement to be about, then the next several years and decades can be a bit painful. And so I know that you help people plan not just the budget for the holiday season, but a budget and a cash flow and spending plan for that transition to retirement, because those first several years really are critical.
Correct. And typically most folks are going to do more spending early in retirement because they want to do traveling and things like that they hadn't had the ability to do. And obviously coronavirus has changed that, where now it's more stay-at-home type entertainment. And, I think that will eventually evolve as we get into 2021 and, with the vaccines and treatments that we can start to open up again and do some more travel. I've got, a lot of clients that have, flown to Florida, driven down to Florida for their snowbird type of events and before the holidays. And then we'll get probably a pretty big rush that will do it normally January. They rent January, February, March down in sunny Florida or Arizona, wherever it is. So that will probably still happen. We have a lot of folks that, want to earn some extra dollars. So right now would be a good time to get a seasonal job. You're seeing it on the, they're advertising on the TV all the time that, hey, we're hiring. Look at the UPS, the FedExes, the Walmarts, grocery stores, everybody's hiring for their seasonal things. And they pay pretty good because they're looking for help right now. So you can make some pretty good extra money. You have to be careful if you're, under your full retirement age with Social Security as to how much money that you end up making. So, make sure you reach out to a qualified professional for some of that advice.
Yeah, important note there. Budgeting can work on two sides. There's what you spend, but there's also what you bring in. If you need to get a side gig or a seasonal job, or maybe UPS, FedEx, Amazon, all of those shipping centers are definitely hiring during the holiday season. So good food for thought and maybe a good strategy to get a little extra money to pay for those holiday gifts. But if you want to do some long-term planning for your retirement, again, it's about cash flow, it's about budgeting, it's about what comes in and the expenses. And Chris McIntire can help you map out both sides and then make sure that your assets and your investments are aligned with those cash flow and income goals. Chris can do that in that complimentary review and strategy session. Pick up the phone, give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, my wife is a great cook, and for a lot of family, we kept the budget in control by providing them some baked goods or some food. And I think that's, heartfelt, something homemade, and it's within the budget.
Certainly. And, a lot of people are doing that to help, the less fortunate as well. And I think that'll be something that Robin and I will do here as we get closer to the holidays, is probably donate and contribute a little more than we normally did to, make sure everybody gets a gift under the tree, so to speak. It's very rewarding when we do that. And it's nice to be in a position for those of you that do, make charitable contributions. It can be good for your taxes. And, this year's a little different, Peter, with, money that can come out of IRA accounts. It's called the required minimum distribution when you're over the age of 72. I still want to say 70 and a half from the old rules.
Yep,
So
but the laws changed.
Yeah, the laws changed back last year there with the Secure Act. And, normally in December, we're really helping people work on those required minimum distributions. And do they want to pay some of that directly to a charity? They call that a qualified charitable distribution. And, we're seeing a significant drop off in the fact that, hey, if I don't have to take any money out, I don't want to. So we have clients that are still making their charitable contributions through their IRA accounts, but we have many others that are not. So just please, everybody out there that's cognizant, there are some nice ways to give money from your IRA account directly to a charity. That's called a qualified charitable distribution. It is not taxable to you, and it is not taxable to the qualified charity, hence that term, qualified charitable distribution.
Imagine this, Chris. It's an opportunity for money to never be taxed, because when we earned it, we put it away in those 401ks or IRAs. We deferred and delayed paying the tax at that point in time. The money grew and built over time, tax deferred, and then you take it out with that charitable distribution, and it goes tax-free to the charity. What a wonderful concept. One of the few opportunities to have truly tax-free money.
Yeah, it truly is. And, that was made permanent under, I want to say it was that the Obama administration, I believe, made it permanent. And so that it has survived Republicans and Democrats. So let's hope that continues forward here through this transition into whatever ends up coming from all of this. We have some runoff elections and everything here. So the balance of powers, and I'll leave it at that.
Yeah, but Chris, to your point, charitable gifting is down. In part because of COVID and everything that's gone on, but also in part because those RMDs, those required distributions from IRAs, has been waived. A lot of people have foregone that. And so many of those organizations that typically do receive a little bit of a windfall this kind of year to help support their organization, their charity, their nonprofit, and the beneficiaries that they serve are not getting the funds that they are used to. So it is something to keep in mind if you are charitably inclined.
It certainly is. And, in the United States as a whole is a very charitable country. And we are kind people, despite what we see on the news and things like that. By and large, outside of the mainstream media, the U.S. Does very well taking care of their own, as compared to countries around the globe.
I read an article recently as well, Chris. This is kind of off topic, but just something to keep in mind. And it encouraged parents to take credit for the more expensive gifts that they give to the kids this time of year. Don't say it came from Santa, because there's other kids that they may end up being friends with or going to school with that are less fortunate, that can't afford those kind of big gifts. And that kid shouldn't feel like, well, Santa doesn't like me as much as he likes Johnny, because he got Johnny the new PlayStation 5 and he only got me a little Tinker toy. And so it encouraged parents to, when you're getting those Christmas gifts, just make sure that you're taking credit where credit is due, and then not maybe making anyone feel a little less fortunate than others due to Santa being the giver of the gifts.
Yeah, well said there, Peter. Well said, buddy. And it's funny that this time of year here in December is Roth conversion month, where normally it would be required minimum distribution month and Roth conversion. So, let's not discount that, guys. Make sure if you're going to do some Roth conversions, for example, you bought you had some Cedar Point stock in your portfolio, and it's now worth 30% less than where it was at the beginning of last year. That might be a decent asset to convert to a Roth and then let it recover as as hopefully things open up next year and people go back to the amusement parks in mass.
Now, Chris, are you seeing more people proactively looking for guidance and assistance and executing Roth conversion strategies? Because we've talked for many years here on the program about how taxes are historically low. They are on sale right now. And I hear that people, with all the coronavirus COVID spending and with the potential shift in power in Washington, they are concerned that taxes could go up into the future. And so right now may be a window of opportunity truly that could be closing on making some of those Roth conversions at today's tax rates, which we know, and at those potentially lower values, which would allow us to recover in a Roth.
Yeah, Peter, and I would say the folks that do Roth conversions typically work with a financial advisor and probably have a CPA as well. And we work with a number of different CPA firms around the area here for particular clients. So sometimes we're much more actively involved in making that process. And this is the time of the year where, we send out the emails and, our clients watch the podcast that you and I are doing today, not just the radio show is available off of our website as well, where hey, reach out to your accountant. Some of you do TurboTax. Run a couple of what if scenarios. Where are you maxing out in that at least the 12% tax bracket? You should be maxing that out, because I think we would all agree that, hey, regardless of elections, taxes are probably going to go up at some point in the future versus staying the same or even getting cheaper, as we spend ourselves, into oblivion, for example.
Yep. But 10%, a 12% bracket, that's exceedingly low as far as the tax rates go. So utilize all of the available space within that bracket is one of the strategies you've talked about with the Roth conversions, maximizing your tax bracket. And Chris, you have accountants and CPAs that you work with, or you're willing to work with the tax professional that one of your clients already has a relationship with, depending, but looking at that from both perspectives to make sure you're doing the right thing.
Absolutely. And, a lot of the CPA firms they're going to say, okay, here's your tax bill for this year. Next year, if we're looking at everything looking the same, and they can run a couple of years out. So now you've got that scenario in front of you. And, as you get into the late in the year like this, all right, well, you don't really have any surprises that are going to come up that can't wait until January 1st, for example. So you kind of know where your income is, and where any opportunities might lie to take advantage of taxes. And, we'll probably get into some of those things here, as we get into the new year tax strategies that you can do up until the filing deadline. We'll hang on those.
Well, if you want to be proactive on that, again, window of opportunity before the end of the year, some of these strategies must be executed before that time. Pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194. And if you do have a large tax deferred balance already built up, congratulations, you've done a good job in saving and growing and accumulating, but that is a tax bill that's waiting for you, and taxes have the potential to change. The Secure Act at the beginning of the year proved that they can change the rules around your tax deferred accounts, and they can change tax rates into the future as well. So we've got the opportunity that we've got left for time this year, and then we've got next year. We probably know what tax rates are, at least for one more year. But again, that is a window of opportunity you want to take advantage of as soon as possible. Pick up the phone, give Chris McIntire a call, 800-868-1194, 800-868-1194. And Chris, we've done several recent editions of the program just around Roths and Roth conversion strategies. You said you're kind of a tax geek. I know that's one of your areas of focus, one of your niches.
Yeah, certainly. And I'll give you the example. In 1986, if you had income of $68,000, you were in the 38% tax bracket. And for right now, in 2020, married filing jointly, if you have income over 622,000, that's the 37% tax bracket.
Wow.
So
Taxes have come
68,
down.
yeah, $68,000 in 1986 was the 38% tax bracket, and to be in the 37% tax bracket, you know, 20 some odd years later, you've got to have income over 622,000. So now is the time to rethink, change that paradigm. You and Peter, we've been using that phrase for 10 years almost.
Yeah, but just goes to show, Chris, that when the majority of baby boomers and those retiring now began to save in those 401ks, they were told, and it actually has happened, that taxes would be lower into the future. And yes, they are. But right now, we've got to shift that thinking and begin to assume the opposite, because Chris, it's like we're at halftime in the game here. We had a good strategy to get a good lead at halftime, but if we don't strategize to keep as much of our money for that second half of the game, we still could go out, blow that lead, and lose the game.
Yeah, absolutely, Peter. And this is the time frame to do significant tax planning. And if you think about it, back in 1986, most people that were retiring worked at the same company for many years. They were getting a pension from that company. They had a modest IRA or a 401k. Nowadays you get the baby boomers that are retiring now have not gotten, don't have the ability to get a pension in a lot of circumstances. Certainly there are still some companies that do, governments, for example, but they've got 7-figure IRA 401k accounts. So they're not retiring with $200,000 in an IRA. They're retiring with $2 million in 401ks and whatnot. So the tax issues of the baby boomers is a lot different than the previous generation. So, and they like to live, let's be honest, they're out there, they're an active generation. 65 is not old today, like when my grandparents retired. My grandfather died at age 64, hardening of the arteries. Today, that's outpatient surgery.
Yeah, indeed. And we've got different expectations for longevity, different activity level that we want to maintain throughout retirement, and a different set of financial concerns to manage and address through strategic planning. And Chris McIntire, president, founder of McIntire Retirement Services, can help you with those plans to strategize for that income that you need to maintain and support your standard of living, as well as tax-wise to keep as much of your hard-earned and grown money in those retirement accounts that you are able to accumulate throughout that working career. If you would like to sit down with Chris or have a conversation, or you just have a couple questions on your mind about what actions you can take before the end of the year to put yourself in the best financial position, pick up the phone, give a call, 800-868-1194. That's 800-868-1194, 800-868-1194. So Chris, stepping back just a little bit, is that kind of your key demographic that you serve, is kind of in that baby boom generation moving into retirement and helping them understand that the tools that they had were great to get them there, but it takes true planning to get them through retirement?
Absolutely. And, and as we've been in business for, a few decades here, we've got a lot of clients, children, now that, kind of call it the millennial generation, I suppose, that are coming on board with us as well. But our core constituency or client base is 45 to, 45 and above, basically. We've got a lot of legacy clients that have been with us for quite some time. And, we're in that rollover business, I guess you would say. And, I don't deal a whole lot with folks that are just starting to work and they're, just putting, $5,000 a year away. We're typically on the closing end of their retirement, or they've worked at a job and took another position. So they have old 401ks and things like that they need to organize, get into a process, get into a plan, where they have more investment options. Had a Zoom appointment with a client just the other day. She changed jobs and had about $80,000 in an old 401k and had no clue, what do I do with this here? Do I put it in my new 401k? Do I, move it outside of my old 401k? And she had an IRA already established with us. So that's what we're going to do. And, can pick individual stocks that way that she couldn't do in her 401k. So, we're on the independent side of things. So, I don't want to say the sky is the limit, but we don't have any real bias one way or another. There are certain investments and accounts that we view unfavorable because of fees and things like that. Some of the things you in the fine print, I guess I would say.
And you screen all that for your clients. You go through the process of helping them determine what their goals are, and then determining what style, what approach, what investment options are appropriate or inappropriate to help achieve those goals. And Chris, during that transition period, or really any kind of big life-changing moment, moving from job to job or moving from job to retirement, I think those are times when people may realize that, hey, now is the time in my life when I do need to work with a financial professional, or I do need some assistance in executing some strategic planning. Big changes, big life events, that's probably one time. Or can you think of any other times when people kind of come to that realization and say, hey, now's the time for me. I need to speak with somebody about my financial issues?
Yeah, and sometimes it's the more the downside of things, basically. Maybe it's a divorce or a spouse had passed away unexpectedly, that type of thing, and or a critical illness has affected somebody. Maybe their financial advisor actually retired and got out of the business. Or
Great point. Great point.
Yep, the one they had been.
You're actually on the younger end of the spectrum for the demographic of financial advisors. And I think a lot of people out there are in a relationship where their advisor may retire before they do. And having a younger advisor that's going to be there probably beneficial.
Yeah, and we're actually building legacy into our own firm right now as well, because I would certainly, if I was sitting on the other side of the conference table, that's an important question to ask. And it's funny, we never used to get that question at all about 10 years ago, and now you get a little bit more often. And, Peter, our business is a little bit different. It's not like we wear out physically from doing this. As most folks get older and more seasons, they've got a nice book of business. So they probably get a little more restrictive on bringing new clients on board and focus on taking care of the ones that they currently have. And, we've got Megan in our office who will be up and coming, and, we'll start building her practice out here a little bit as well too. And yeah. So that, yeah, you've got to have that succession plan, because, hey, who knows what the next pandemic is now? I'm not going to use, it might be, maybe it's not the Chinese virus, it's the Canadian virus,
Who
from
knows?
hockey pucks or something.
But I think that's turnabout being fair play. I think that's a very legitimate question. A lot of financial advisors probably ask their clients, hey, what are your ideal plans or desires for legacy? How do you plan to pass your assets and your estate effectively and efficiently, and let's work to strategize around that. But I think it is a very fair question for a potential client to ask their advisor. An investor, a saver, has worked hard for their money. They want to make sure that the advisor that they choose is going to be there for a while, and if something is to happen, how that transpires, if they are to retire, what's my next line of defense? Who is my next resource there? So again, just things to think about, ladies and gentlemen. And McIntire Retirement Services, certainly, Chris, you've thought about that in your office.
Oh, yeah, we definitely have. And Peter, Robin and I spent a couple of weeks in the Outer Banks there right around the election time. And I took the microphone. We did our radio recording on the remote side of things, like nothing ever changed. And we had many appointments. And, sometimes it's nice when you get the ability to work on the business versus work in the business. But, I would say this year, we haven't been able to do mass marketing and, be out in public, that type of thing. We do a lot of educational events at the local colleges, and, we haven't done any of that in the year 2019 or 2020, I'm sorry. And so, it was nice to have a book of business and lots of referral clients and things like that we work with. But a lot of our new clients for 2020 came from their old broker retired. He worked at the XYZ firm forever. He's retired, and they brought in, not everybody wants to work with a super young advisor, that type of thing. So, it's nice to have gone through a couple of different crises here, and, we know the next one's coming down the road. Let's just hope it's a long ways away,
Yeah, definitely. Well, a few gray hairs, Chris, and you and I both have been around for a while and seen a few different sets of conditions, a few business and market cycles, a few black swan events, and have helped clients to maintain their long-term goals and outlook in their investment accounts and also prioritize what that goal should be with each and every dollar. That, ladies and gentlemen, is the process of planning. So whether you want to know how much you need to retire, when you can retire, or are you there yet? What does retirement look like? How can you generate that cash flow? What does taxes, how do I manage those into the future? What does that look like? How can we plan strategically today to keep as much of our money when we get there in the future? All of these are items, they're discussions that Chris McIntire can sit down with you. He can go through that thorough, comprehensive review and analysis and can help provide you that guidance. Pick up the phone and give a call, 800-868-1194. That's 800-868-1194, 800-868-1194, or you can go online, McIntyreRetirementServices.com. Chris, it's always a pleasure. We appreciate the time and the guidance that you provide for Northwestern Ohio savers and investors. We know clock is ticking toward the end of the year. A few deadlines, folks. Let's get on it.
Yep, my pleasure to be with everybody out there. Please stay safe and remember social distance, wear a mask, and all those other good things there. Be careful out there, guys.
Thanks, Chris. Look forward to talking with you real soon.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.